Hello and welcome back to another video. My name is DJ. Today we are back with another crypto video. I'm actually not at home, but I am in a cafe. But regardless of that, I still wanted to make a video because I'm actually working in the weekends. Yes, I'm a hustler. I hope you like that. But yeah, I'm working as a web developer. But I decided to make a quick video because I want to keep the channel active and give you guys some valuetainment because that's what I'm about, guys. Honestly, I'm kind of done doing crypto videos that are all about pump and dumps and stuff like that. I want to give you guys actual value that you will take away that you can apply immediately and hopefully gain from it, gain some confidence as you are in the crypto space or even the stock market. This applies honestly anywhere. This is called TA. What is TA? Is technical analysis. And today we're going to be kind of giving an introductory lesson into it. I don't want to make it too long so that you guys can take away and not be overwhelmed with the points that I'm going to teach you guys and some terminology and some graph trend patterns as well. So yeah, we're going to be starting off with that. If you hear some of the background noise, I do apologize for that. I will try to find a better setting in the future, but I do feel like this is not bad of a setting. I have been working here for around 3 hours, and I'm actually quite enjoying it. It's a lot of people prefer very quiet settings, like in a library or literally at home. For me, I'm actually kind of the opposite. Sometimes I work by watching a video in the background. But anyways, I'm getting a little bit off track, am I? Going back to it, let's start with what is TA. Obviously, as I said, it's technical analysis, and this is kind of actually an important analysis. Other than what you have other kind of vectors that you can analyze a graph or a stock or a crypto. Obviously that's by sentiments, and obviously that's by just kind of general world news. So for example, a stock market is affected by real world news, right? At the same time, there's also sentiments with it. So for example, there's a hype phase. I kind of spoke with this in the previous video that I made about pulse chain vs Ethereum. There's a hype phase, and there's the growth phase. There's the fear phase, and obviously you guys already know bullish and bearish times. But going back to it, I actually seen a lot of this. Technical analysis is actually very neglected in the crypto space because a lot of people just, either just jump in because based on the hype, or they just like to, it's kind of a gamble. I'm not gonna lie to you, it is a gamble at the end of the day. So I wanted to teach you guys a little bit of this so that you can do this just maybe as a small precaution or just a small step that you can do before you invest in your next crypto, so it makes your investment more educative, and more calculated risks. You know what I mean? So the better you calculate your risk, the higher chance it actually makes sense to make. So the first thing we want to do, I'm gonna also explain some of these tools on the left. I'm not gonna explain all of them because they do get very, very complicated, as you guys can see. But I'm gonna explain a few, and I will be also explaining the Fibonacci retracement, which is actually a really sick trend, because if you think about it, Fibonacci is literally a sequence of natural numbers that we can see around us in nature, right? And I've actually noted this down as a sentence that I didn't make up, but it's actually quite interesting. Fibonacci sequences are seen all over nature, and it is the way humans and natures behave. Absolutely crazy. The number. I'm not really. I don't know the actual number, but it sounds like 1 3 something something something. It's not really consistent, but at the same time, it is. It's like a separate pattern that we don't see. No, we don't really. What am I saying? The number of, you can see Fibonacci sequence, guys. It's like, for example, dictates the number of pellets on a flower as well, and literally the actual pollens. The structure. It's like in a spiral. It's like a Fibonacci level, and the crazy thing is that we can apply in literally graph technical analysis. You might think that this is crazy, but guys, we are humans. We're literally natural at the end of the day, so we can predict human nature using a natural pattern, which is this Fibonacci retracement tool. But we're going to get to that in later throughout this video. Let's start with a more basic terminology, which is, I want to start off with talking about the support and resistance levels. Again, I don't want to make this video too long. I'll probably make a second part to this. Maybe you guys let me know if you're enjoying a video like this. Again, let me know in the comments and like and subscribe for more. So yeah, let's start with using the trend line And I'm going to be using this kind of around in this section, right? And what I'm using right now, by the way, I'm using the BNB chart just as an example, to use it as a, just, a graph to, I'm not going to use this section. I'm actually going to use this way because this is going to be a good moment to get to the first graph pattern that we're going to cover. We're going to be covering several graph patterns that are actually that you see literally everywhere. Depends on literally ever stock, crypto, anything. But I will be getting to one requirement that needs to be true for these tests, for these patterns to be more reliable. Okay, so I'm going to remember that thought. But first, let's actually establish what is a resistance line and what is a support line. I'm going to be drawing two lines right now as I'm going to be focusing on this area right here that I'm circling around. Okay, so I'm literally doing this on the fly and I'm kind of already establishing that there is a support line right about there. Okay, I'm going to be drawing another line now and I'm going to be drawing it just around, okay, just around right there. Okay, but I'm going to be changing this color of this here to a red. Okay, and I'll be explaining how did I come about knowing the support and the resistance lines and what are they. Obviously, what I'm doing is, first of all, this is our scope. Okay, our scope is right here. Now I want you guys to think that what we have right here is really non-existent. We don't really see this, cover this. Okay, we're trying to predict the future. Okay, so yeah, the first thing we want to see is we kind of want to see the areas are consistently being tested, okay? And we're kind of seeing like the staircase effect, but a more, the actual test, the graph pattern is called the rising wedge, okay? This is where it's starting to have higher highs and lower lows. So you can imagine the support line and the resistance line is just carried on increasing, okay? Now I'm going to be drawing another support line and another resistance line. So I'm going to be drawing just around there. Or actually, no, that's a little bit too low. I'm going to be drawing just one, just about maybe perhaps right here. This is actually kind of hard to draw on this segment of the graph. Let's do one like, yeah, let's just right there basically. Not bad. Yeah. Actually, we can extend it all the way. And then let's do a resistance level. Okay, and then this one we're gonna color it green. Okay, and we're gonna kind of spot the differences between those two. Okay, I can actually already see a separate trend graph right here, but we're gonna get to that in a second. So what is a support line? If you think about it as a support line, it's literally, ladies and gentlemen, is kind of, the level where a lot of people are deciding, okay, this is the level where I want to start buying. This is where people are anticipating to enter their trades. Okay, you're gonna see that by, for example, the more a support line is tested, the stronger it is. Because why? Because people are now, if they see the line, if they see the graph on here in the middle line section, they'll be like, okay, no, I'm gonna wait until it goes back to the support line that we have kind of established, and it gets stronger the more it's being tested. As you can see literally right in here in this section. So this is kind of a support line, right? And a resistance line is kind of the opposite of it. It's a place where it keeps bouncing off. Why? Is because that resistance line is kind of a profit line for a lot of those traders, right? So you get a lot of people who establish this support line where, okay, this is where I'm going to enter, and then this is where I'm going to sell. So resistance line gets stronger the more it's tested. You know what I mean? So literally, a resistance line is where a lot of people establish the fact that, okay, this is where I'm going to take my profits, and the support line is, okay, this is where I should enter my orders. Do you understand now? So when we look at this graph right here, we can kind of understand that there is, okay, the support line seems like it's getting higher and higher, right? So I'm going to be drawing like perpendicular graphs, like literally right here, it's getting higher, and here, we're going to be drawing another one. It's getting higher. The same thing is going on with the resistance line. Okay, resistance line is getting higher as well. Higher highs, higher lows. That's literally the rising wedge. That's what it's called, okay? Ladies and gentlemen, this is the rising wedge. So obviously this is a bullish trend. And as you guys can see as well, right here is where, there's a kind of like a staircase that goes up. And this is obviously a bullish trend. There's obviously bearish trends where, for example, it's literally the opposite. As I said, a falling wedge. So look out for those where the lows are getting lower and the highs are getting lower as well. Do you understand? So yeah, moving on to this part right here, you guys can kind of tell, there's the support line is actually being tested so much that this is where people, okay, it's like, okay, if the price falls down on this level, I'm definitely gonna buy because I know this is where the lowest it will get. You know what I mean? But there's actually a trend pattern that I can actually realize right now. I'm going to be using another tool, okay? But I'm not going to be explaining it fully. I'm just going to be using it to draw the triangles and stuff like that, okay? I'm already kind of, you know, actually, yeah, you know what? Let me not use this tool because I feel like I'm not going to use it correctly. Let me just do a, yeah, let me just draw a line, but we're going to keep it, yeah, we're going to keep it white. Okay. Just right there. This will take some time. But what I'm going to draw is actually called a head and shoulders pattern, right? So a head and shoulders can actually be bearish and it also can be bullish. It literally depends on where is the peak or where is the head, right? Where's the head aiming at? And I'm going to show you guys actually a picture that shows and explains this. And again, I don't want to make this video too complicated, but I'm going to show you guys the head and shoulders is literally this one, right? You want to look at the head direction. If the head is actually at the peak, that means it is a bearish trend. But if the head is actually the bottom, that means it's a bullish trend. Why? It's because the right shoulder has already established and broken that resistance level. If you guys can imagine a line right here, the right shoulder has proved, okay, that we have just broken that resistance level. And right now, where we are right here, this is the new support level and this is the new resistance level. But now when you look at the graph as a whole, you establish, okay, you identify that this is an inverse head and shoulders, and this is actually a bullish trend. Okay, so going back to the graph, as you guys can see, we can see the head. It's not really much deeper than the shoulders, but you can kind of establish it, right? You can establish this kind of pattern. And as I said, it is a bullish graph. So actually now when we draw a prediction, right, again, we're going to act as if we don't really see what's coming up. We can see that this is a bullish trend, and it was indeed. But obviously, stuff goes down and stuff like that. This is why, guys, it's actually quite very important to take profits. Okay, you just want to take profits. That's the end of it. I'm not gonna lie to you guys. You never want to. Depending, obviously, if you are day trading, depending on if you're swing trading or long trading, this won't really matter to you. If you are swing trading, or actually, wait, it does, because this is actually a day candle. So this is kind of a swing trading thing, right? So the next thing, because again, I don't want to keep the video too long, but we have already covered, two graph patterns that technically are four, because if you take the inverse of them, so you got the head and shoulders right here. I'm going to be using the text, and we're just going to say, we got the head and shoulders. Okay, we have it right here. And we're going to use another, I usually like to call it the staircase trend, but it is technically, what is it called again? Rising wedge, yeah. So we're just going to say rising wedge graph trend, and that's kind of what we learned. And obviously we have learned as well the support and the resistance levels. So actually now I want to go back to when can you apply this, because if you remember, I told you there has to be one requirement, ladies and gentlemen, and it is the fact that this can only apply, right? These graph trends can only be reliable if there's only one condition in that stock market or cryptocurrency that you are thinking of buying, and it is the volume, ladies and gentlemen. Yes. Now, the reason why, okay, remember when I told you guys we can predict human nature? by looking at the graphs, by using Fibonacci, which I'm going to get to in a second, but I'm going to only keep it brief because I feel like the video is already taking a little bit too long, and I don't want to overwhelm you guys with so much information. I will make this into multiple parts perhaps in the future. Let me know if you want more videos like this. But as I said, we need high volume in whatever you think of investing. The reason why, because if it's a lower volume graph, there's going to be a lot of noise. And what I mean by noise is again where it's going to become too unpredictable. There's going to be movements where, okay, it just wouldn't make sense because it's just too little volume. And actually, if there is high volume, and if there is high volume, as I said, it will make those graph patterns more reliable, and it actually literally proves the price predictions that we are going to have because it's high volume, right? And obviously, another side plus is the high volume indicates that there's high liquidity. It indicates, as I said, graph trends because it is high volume. The more people are taking action in a graph, and we can now analyze, okay, this is what a lot of people are doing. For example, right here, we understand, right? For example, here, that this is a falling wedge, ladies and gentlemen. We understand because it's literally high volume. It's absolutely, bearish. You know what I mean? This is a downtrend. There's no two ways about it. There's no noise because it's literally a high volume section. So, for example, going down here, this would be a perfect place for me to enter, right? And this is actually, a perfect segment, to be honest with you, to do the Fibonacci retracement. Okay, so Fibonacci retracement, you want to start it when you have, you want to start it as at the bottom of, the lowest low, basically. That's where you want to start it. And then, so we're going to draw that. Okay, you might be overwhelmed, guys. I'm going to keep this very, very simple, and you want to kind of reach to where it used to be, right? Kind of, where the graph used to be normally, like a normal price. And we're actually going to keep that right there. I think that is perfect because I'm looking at this line. This seems like the normal, the support level of the previous fall, right? And this is kind of, you can get a little bit intimidated by this, but just quickly, I'm going to be showing you guys, this is the settings that I'm using for the Fibonacci retracement. So you guys can copy this and just paste it. Not really, but we just paste some of the colors. At least it will help. At least these two, the 0.5 and 0.61, and perhaps the 0 and above. Make it green because this is, we're going to cover this right now real quick. But basically, as I said, we're using the Fibonacci retracement. And again, we start the point at the lowest low and we put it back to the previous support level that we believe that it is, okay? The first thing that I want to explain is, why do I have these two numbers, or this area right here is yellow? This is called the golden phase, right? This is where you want to enter, or this is where you want to buy, because it shows, because of Fibonacci, these are the two ranges where you want to enter and understand, okay, this is a good time for me to enter because we know the low, we are past the lowest low, okay? So once you kind of figured where the graph stands, let's say, as we said, where we don't know what happens in the future, right? We use this graph, we know that there is a golden range, and we are actually in the golden range right now. So let's say, okay, now we are here, let's look at more supporting evidence that this is a good time to buy. And this is what we just did. We established a literal head and shoulders that is a bearish trend. So this is actually a double down, a perfect time to buy, okay? So we're going to be putting, for example, let's say I bought here twice, thrice, whatever, is super, super bullish, basically, right? So once you have entered your buys, we need to understand actually now what are the three lines above here, or technically four, but anyways, right? As I said, this kind of literally depends on your, if you're day trading, swing trading, or whatever, right? But I'm going to explain what are the next 3 or 4 lines above here. So once you have bought in this area, we have supporting evidence double down that is a head and shoulders as well. And we are in the golden phase. So we have made our buy orders. This line right here, the 0.3, 0.381 line is the first take profit, okay? And this is actually supportive. As you guys can see, the price has actually peaked right there and it has fallen down. You understand? So this is literally, the Fibonacci is crazy how it literally is accurate. So that literally, as soon as it hits that profit line right here, guys, you want to take action. Okay, if you want to play it safe, take action, take your profit, right? We got other lines right here. This is the other line, the 0.382 negative 0.382. This is take profit 2. And then if we go back up, 0.618, that's take profit 0, 1, 2. Oh no, actually, I'm a programmer now. 1, 2, 3, and then you got 4, which is obviously, this is absolutely crazy. This is if you're like long trading as well, because that technically does go back to the higher highs. And really, if you're being patient to sell on this, supporting evidence would be, okay, have we ever reached that price before? If the answer is yes, then okay, that is more of a safer option. But again, it is a long position. I'm not gonna lie to you guys, right? But if you're thinking of more, okay, swing trading or day trading, you want to think about, okay, I'm going to take profit in take profit 1 or take profit 2. But again, right here, the best call would have been, hey, let me sell in take profit 1. As you guys can see, that was the highest high before it dropped down the same day, because you can kind of tell a lot of people were patient for that take profit section range, and they have dipped. They've called in the profits and they left, and they're going to trade for another day. Okay, so yeah, guys, that is basically the gist of things. I'm actually quite happy how this all kind of fitted together. I hope it's not really, too overwhelming. Again, as I mentioned, because I have my notes right here, the only thing that you need to have in a graph that you're thinking of applying technical analysis is that it has to have sufficient volume. Okay, so whatever you're investing, like for example, investing in a low market cap crypto, like 50K market cap, doesn't really apply that much. You understand the okay, because there's a lot of noise, and as I said, higher volume often reduces market noise. Market noise is the random and unpredictable movements in the price that can often lead to false signals and misinterpretation, and that's not what we want. Okay, so yeah, guys, I'm gonna end the video there. I don't want to make it too long, but I hope you guys enjoyed it. I honestly did. As I said, Fibonacci sequence on its own is literally a miracle that we have in in our daily lives. It's literally in nature everywhere, and it's crazy that we can use it to predict human nature, guys. Literally in the stock market as well, or the crypto market as well. Let me know what you guys think about this video. Has it been of any value? I hope you learned at least something new today. We've learned, the support level, resistance level, the head and shoulders pattern, rising wedge, and the what is it called, falling wedge? Yeah, falling wedge, and the head and shoulders obviously is quite important one as well, and the Fibonacci retracement tool. Again, use those tools that you have on those graphs to your advantage. Okay, and again, yeah, remember, like this graph right here, like for example, I'm using Dex Screener, it will be saved. The next time you reload. So if I literally refresh, fingers crossed, should save. Fingers crossed. Let's see. I kind of have very bad internet because I'm in a cafe, but there we go. I was scared for a second. Yeah, it does save because obviously it probably saves it on your cookies and remembers who you are. So yeah, you can literally like draw and analyze the graph and like go sleep on it. Wake up the next day, you will remember, oh, actually, I did identify these graphs. And you can, again, like use your text and write stuff down. Okay, hey, maybe don't buy until we hear from X. You know what I mean? Like, write down your notes. Again, it's kind of important to write down your notes because, guys, we don't really remember. This is kind of a general advice. We don't really remember everything that we think in our minds. You want to write it down because comes the next day, you forgot whatever great idea that you had. And sometimes the worst thing is that we forget what we don't know. Or we don't know what we just forgot, is what I'm trying to say. And that is the worst cases where you thought of a great idea or you thought of a great strategy and then you didn't write it down and then you just forgot the great idea and you don't know what you forgot. So don't waste it, guys. Use notebooks, write things down on the charts as you go, and it will be helpful. Anyways, guys, I don't want to make the video any longer. I hope you guys enjoyed it. My name is DJ Khaled, and subscribe for more videos like this. I make crypto programming and cybersecurity videos. Expect more videos like this in the future. I hope you guys enjoyed it, and yeah, I'll see you next time. Bye bye, guys. Take care.